Hello traders, here's your market update for today. We'll be breaking down the key technical setups for DXY, crude oil, gold, and the Australian dollar, and tying in the fundamentals that are currently driving price action. Let's jump into the charts. The dollar index, DXY, is still caught in a sideways range, trading between 102.66, which is support, and 103.72, which is resistance. Momentum is lacking, with the RSI hovering around 43 and MACD remaining flat beneath the signal line. From a fundamental standpoint, the dollar's direction remains heavily dependent on upcoming US CPI data, which is due this week. A hotter than expected print could reignite Fed hawkishness, but until then, the DXY remains in a holding pattern. Market expectations for rate cuts have softened lightly, with June pricing still around 50%, but the dollar lacks clear conviction either way. Crude oil, on the other hand, remains supported above $86, showing strength after bouncing from its 20-day EMA. The uptrend remains intact, and RSI sits near 57, suggesting moderate bullish momentum. MACD is still positive, but showing some signs of flattening. On the fundamental side, geopolitical tensions remain in focus, especially with recent Israeli strikes on Iranian targets. Supply concerns remain elevated, with OPEC sticking to its production cuts. The risk remains tilted towards a tighter market. Next resistance sits near 87.5 and $90, with 84.38 as the key short-term support. Gold, on the other hand, is consolidating just below the $3,000 mark after its recent rally stalled out. The technicals show a potential loss of momentum. MACD has crossed lower and RSI has slipped beneath 60. Price is still holding above the 50-day EMA at 29.43, which is a key level to watch. Fundamentally, gold remains supported by safe haven demand. Central banks, particularly China, continue to accumulate reserves. That, coupled with lingering geopolitical risks and US uncertainty of US inflation data, has helped gold remain elevated. The broader uptrend remains in place, with resistance at 3055 and 3080, and support at 2943 and $2,900. The Australian dollar remains weak, trading just above the 60-cent mark with a clear bearish structure. RSI is deep in oversold territory around 28, and MACD is still firmly bearish. Price is trading below all moving averages, showing no signs of reversal yet. Fundamentally, the Aussie is weighed down by a stronger US dollar and lack of domestic catalysts. Australia's trade surplus missed expectations, and iron ore prices remain soft. On the US side, dollar strength remains sticky due to delayed Fed rate cut pricing. Support is at 59 cents and 58.39, with resistance at 60.40 and 60.87. Well, that wraps up today's morning market analysis. Just the key charts, levels, and macro drivers you need to know. Stay sharp, stay safe, and happy trading.